everyone. This is Mortgage Pros 411. I'm Audrey Boysnow. I'm here with Kevin Casey and today with Steve Richman, who did dress up a little bit for us. Kevin looks like he's about to go to the gym, but what else is new?
Yeah.
So a little bit before we get going, big, and I mean big news week this week. So Wednesday, that'd be tomorrow, the Fed meeting will conclude. They're meeting right now. They will have a statement. That statement will often move markets, especially when it's on the same day as an ADP release. They're expecting 78,000 job creations. We'll see. And then we're also going to get the Q2 advance reading on GDP. So that'll be something. Thursday, Fed's favorite measure of inflation. Do you think they're going to get a preview of this? PCE, we expect for it to be unchanged. I think I read somewhere they do. Like if it's within 24 hours or something like that. I don't know. I could be wrong. So don't quote me on this. But we'll have PCE on Thursday and then Friday, my favorite. What is it, Kevin? What is my favorite report of the month?
The labor jobs, the labor.
BLS.
Yeah.
Steve, I nicknamed it BS report many years ago. They are expecting 110,000 job creations, and for the unemployment rate to go from 4.1 to 4.2. So last month, and so many months, we expect something from BLS, and it ends up being completely different than we expect. So we will put very little credence on that idea.
But
But
not only do we get it once a month, then we have to wait, what, another month to get the readjusted numbers to figure out what they said that they didn't say that they're saying.
well, you don't even get it then because you've got the revisions, then you got the revisions again. We really don't get the real numbers until we get the QCEW report once a year. And that's when we find out the BLS was off by 1 million jobs in a year. That's right, kids, 1 million. So that's what
It's
drives me
nothing.
crazy.
There's 350 million of us, so they could be off by 1/350th. Right?
Okay, I'm going to put Kevin in timeout. Kevin, turn and face the wall. Don't say anything for the next, I don't know, 2.5 minutes. Anyway, the part that bugs me, as we all know, because I know I babble on endlessly about this, is that it moves the markets. It impacts our borrowers' interest rates. It has a big, humongous effect on people's lives. That's why, I mean, if they just want to like send out some stupid report, great. And by the way, our friend Rob offered to hook me up with someone at BLS a few weeks ago, and I have nudged him multiple times about that, and will continue to do so
That,
till I get somebody that I can talk to about this. That also leads us to remind everyone to check out Chrisman's Marketplace and their website. Our videos are there, and our friend Jason, who has been the keeper of our YouTube channel for the last, I don't know how long, he was a little behind and now he's catching up. So you can go and listen to the videos at 1.5 or 2 speed. Can you imagine this? Isn't that the best? So,
well,
okay, Rob has just chimed in. I have not forgotten the BLS contact. All right, I will continue to bug him. I would also like to encourage people to look at the commentary every day because you get little tidbits like this all in the same day. Did you know that there are 2,554 down payment assistance programs available nationally? Isn't that incredible? And also,
can you use them all at the same time though?
also, you can learn in the Crispin commentary that Guinness World Record was set for a 9,000 gallon margarita. So we know that Rob likes tequila, so that's not surprising that he would include that, right? Oh God. Anyway, okay, that made me laugh. Well, obviously. A few things of note. So we had some appreciation, home price appreciation reports come out today. Case-Shiller and FHFA. Never really understood why they come out on the same day. And they're always like a month behind. These are for May. So Case-Shiller was up 2.3% year over year. That, and we won't even get into the seasonal adjustments and non-seasonally adjusted at the moment. FHFA, which includes loans that are conventional, no cash, no jumbo, that was up 2.8% year over year, also for the month of May. So home price appreciation, although it's slowed, is still happening. We still have an appreciating asset. So that's something. And then as far as, it being jobs week, we got the JOLTS report today. it was down 275,000 jobs, 113,000 worse than they expected. We have 7.44 million job openings according to Jolt, and that is compared to 12 million in 2022. So we have way less jobs, but also remember that Jolts could have could have the same job posted under different job descriptions, different states, different areas, whatever. So the hiring rate went from to 3.3% from 3.4%, and the quits rate is at 2.2%. So anyway, it's interesting with these jobs, and I think BLS does that JOLTS report, don't they? Does anyone know?
I believe they do.
I think so
Where
too.
I go, just if you're playing along at home, just a couple of things that are already said. If we keep saying BLS, BLS, if you're trying to track this stuff yourself, bls.gov/LAU. That's the report that you want right there, bls.gov/LAU. That's going to tell you exactly what's going on with that. Also, we talked about, you were talking home appreciation. Case-Shiller versus FHFA. FHFA has recently changed their entire format on that site. Case-Shiller hasn't. So if you're looking for a little easier place to navigate, I've become more of a Case-Shiller fan because FHFA has changed their entire site. Sorry, just trying to make it easy for the bingo players at home and how they're keeping track of the scores.
Well, and also Case-Shiller would take into account all mortgages or all sales, and FHFA is only conventional, and it does not include cash or jumbo, which is an important distinction, especially in some of our markets, right?
Or private money or FHA or VA, correct?
So there you go. So Steve, you and I were having a little chat about AI and what's going on in the marketplace. And again, I talk about this pretty regularly. I have a kid who is in AI and newly graduated from college. And so he and I have really long conversations about a million different things around this. And then he was at a hackathon this weekend, and he said that there were these guys that were close, that he had met that were doing some sort of real estate thing with AI, and he was laughing. I said, yeah, he goes, they're hiring. Should I get a job with them? I'm like, well, that would be interesting. So anyway, there has been a lot of talk ever since I've been in the business, actually, which will be 36 years in the fall, and about how we're going to be replaced. LOs are going to be replaced. And we have so many examples. Kevin and I daily, as loan officers, have so many examples about how that is never going to freaking work. So what are your thoughts on this as you travel the country and talk to LOs and people in the business?
I have so many. The first one has become a cliche, but I've been saying it for years. AI is not going to replace you, but people who use AI are going to replace people that don't use AI. Sorry, that came up a couple of years ago, but I still absolutely believe in the veracity of that statement. There are actually, think about it this way. Every underwriter, when they introduced DU and LP, automated underwriting, they were like, oh my gosh, we're losing our jobs. There are still underwriters. ATM machines came into the marketplace, and they said there's no longer going to be tellers at bank. There are now more tellers in banks than there have been at any time in history. Now, are they doing that? Is true, because there's more banks. So what happens is, are they doing the traditional things that a teller does? No, they are not. All of a sudden, they have to be able to use different skill sets to accomplish other things within their job. And that's what's going to happen to LOs. So the two things that I say when it comes to this, one, if I'm an LO today, there's two types of AI that are out there. You got corporate AI and individual AI. And corporate AI, what is that? That's, well, the company's deciding to institute AI to talk with our CRM that's going to have a chatbot that interfaces with the consumer when they get online, that's going to automatically pull your credit report and your pay stubs. You don't do that stuff. The company's paying for it. The IT does that. Let them do that.
Yep.
But there's a lot of AI that's individual that's out there right now that says, hey, how can I help make better flyers, better emails? How can I use something to make emails? How can I change my picture that's going out online, my headshot? You look at something called otter.ai. Anybody who's on this call right now, if you go to otter.ai and you download it, it will do what? It will record this webinar, give you a transcript of this webinar. It will then say, hey, give me a 5-point highlight of what was discussed in this webinar and do follow-up emails for anything that anybody needs. Imagine doing that with your customers and it gets sent out just like that. That's individual ways to use AI for little to no expense that you don't have to worry what your company says. And there's a slew of them that are out there. Right now, everybody likes ChatGPT. I'm into Perplexity. We can talk about why in a minute. But from a corporate standpoint, my view is this. You got to be a little schizophrenic right now. Because you have to think about, what do I need to do to survive today, to work today? Because all these AI companies, they keep telling you, you can do this, you can do this, you can do this. Okay, when can I do that? We're putting it in motion. We're making it we're in the infancy stages. So you still have to figure out, what do I need to do to accomplish everything today? But what am I doing over here, schizophrenic, to be prepared that when this stuff is ready to roll out, I can hit the ground running and make it happen. So that's why there's this dichotomy between individual and corporate, today and tomorrow. Those types of things is the way that I'm looking at AI right now.
Yeah, I think when it comes to the day-to-day, some of the crap that we don't want to do, yes, please do all that. But for a deal like I have going right now, where we go into contract on last Monday, and by Wednesday or Thursday, I had the appraisal back and full loan approval. And we were going to close August, I think 8th or something, or 10th, or I don't know, something like that. Well, the buyer is going out of the country, so they want to close early. So I have navigated all of these different things, jumped through all these hoops, notified all these different people. And how does that even happen if you don't have a human who's talking to someone going, oh, wait, you're leaving the country? Oh, okay. And you would rather be done before, let me work on that. So there are some things so many things. I mean, that is one tiny example. We've talked ad nauseum about Kevin's deal he just closed, where the guy who is literally, his job is to build a system for a company that eliminates loan officers, yet he was the best example of how you will never, ever be able to eliminate a loan officer ever. Right, Kevin?
No, no, it's amazing. I had to drag him kicking and screaming to the close because he was refusing to do, I'm not giving you another pay stub. This is ridiculous. And I'm like, yes, you are. And you're going to
But
have it for me by 2 o'clock today.
But you said it, Kevin. You said, oh, I use all the down payment assistance programs at once? You remember Audrey put you in timeout, but we're out of timeout now. So, but that's what a wonderful use for AI to say, I have a customer that is A, B, C, D, E. Is there a down payment assistance program? And then what are the parameters and be able to pull that? That's great individual use of something like that. That's sitting right there.
It is. I think it's going to be interesting too, though, to see how is it, because I'm finding with things like private money and non-QM, which is the bulk of my business right now, I get on the telephone, I call people, it's a conversation because there are so many little details that you can't even think of when you're writing an email. And so how do we replace that? And do we even need to or want to?
Well, I look at me and I'm different. I'm not, I used to be an LL. We're different. I'm a professional speaker. I travel around and I work and I consult, and that's what I do. And I'm watching a lot of people make their presentations based upon AI. And I got to tell you, the second that, I'm like, that's an AI presentation. I see exactly what's going on right there. And quite frankly, the more that people are relying on the AI to get these presentations, the better it is for my business, because people are saying, I care about the authenticity and I care about the person it's all about hitting the curve. When's the last time you had a normal loan? Normal has left the building.
What
Yes.
is a normal loan? That's really, what is that?
20% down, steady W-2 employee.
But there's always going to be a curveball.
Yeah.
When that curveball comes, are you going to be able to hit it? That's the question. And the person who knows what they're talking about on the stage and knows how to do the loan is going to be able to hit the curveball. The one who's just saying, hey, I'm a computer. Computers aren't good at hitting the curve.
Okay, here's one that I saw this week online. Someone posted, this is what they said. First for me, realtor confirmed match on SAM results indefinitely banned by HUD. So they go to the realtor and they tell them, so it's one of those back end reports where they're checking to make sure none of us are bad guys, right? Or
I
bad
saw
people.
the same post, by the way.
You did. Okay. So the response was, why did you search me? Turns out she was in federal prison for 5 years on a $2.1 million mortgage fraud scheme. I'm like, okay, so what? I just want to know which regulatory agency gave them their real estate license back. Let's start there. But also, this is a really good time to talk about know who you're working with, right? I mean, have a freaking conversation with somebody. And
So
maybe there should be more awareness within the mortgage and real estate community that these reports are being done on the back end. They are checking us all out to make sure we're not on some naughty list.
this was a real estate agent, though, not a mortgage professional, correct?
She
Right.
used to be a
Right.
mortgage professional.
Yeah, I
But
don't see
no
it.
real estate agent.
Exactly. But that, so what? I mean, real estate is,
I don't think NMLS is going to let you get your license if you have a criminal background.
Well,
oh,
I'll argue that point a little bit if you really want to.
Really?
Just the lawyer in me says that. But one thing I want to back up and then go forward. You said, oh, the government's checking up. I say this to people all the time, LOs. I mean, I'll ask you right now. Hey, Audrey, can I have your social number?
no.
But we're asking consumers this all day long. Give me all your personal information, everything. If you don't think that these people are looking us up online to figure out, are we true, real, legit, or are we just a computer bot? They want to know that you're a real person. So you need to have that presence online. I sold a car. I bought a car years ago. And they said, oh, someone's going to meet you and you'll swap cars, bring the title. And so I typed the guy's name in. It says wanted for murder. I said, I'm not showing up in a parking lot with title to my car. They're like, that's not him. Here, go to this site. You can see his Facebook page. I'm like, it better be that old guy who shows up in the parking lot, not the one with the Mike Tyson tattoo across his face. But I get you that you say that NMLS isn't going to let people that have done it wrong get back into the industry. I know a guy, he went to jail for, he was a title attorney, went to jail for mortgage fraud and doing all that and opened up a title company in his sister's name. So
Yep. Yep.
I hear what you're saying. My whole comment about criminals are professional criminals. So they're always trying to figure out how to stay one step ahead of trying to do it right. You know, I mean, oh, well, you could do it this way. Well, they're going to figure out what's the next thing and how are they going to do it and how are they going to do it. That's their job.
I was listening to a Freakonomics episode about licensing, and this woman, I think her name was Rebecca Ellingsworth, wrote a book about this, and she teaches law students. And she was saying that 20% of the workforce now has a license. And I never even thought twice about it. I think licensing in our industry is very important. I think there should be a vetting process. I think that there should be some sort of litmus test for whether or not you should be in it. And even though in my opinion, the bar is very low in our industry, at least we have a bar.
Mm-hmm.
But with 20%, okay, so she was going through some of these.
So you need a license to cut hair, you know.
Okay, so funny you mentioned that because she was saying that hairdressers need 1,200 hours of intern and oh no, hairdressers need 1,500, attorneys need 1,200. No, it was the opposite. Hairdressers need more. That was it. Hairdressers need more hours of internship than attorneys. That was one thing.
Same thing. Appraisers, another one that's kind of crazy how long.
Yes, but they've gotten better on that. It takes
Yes, they
more
have.
intern hours to be a drug and alcohol and drug abuse counselor than to be a physician. Isn't that incredible? And by the way, she was saying there's no national database for physicians like we have for mortgages. So I found that
Oh yeah.
really, really
You're
interesting because I mean, you can be a physician and you can do something horrible in one state and
You just moved to another state.
Well,
presumably
I see that on Netflix every time I turn on some other opioid crisis type of thing. They get shut down in one state and then they just open up in another state.
Mm-hmm.
So why hasn't the medical industry thought to do an NMLS type database? So anyway, with
Yeah,
that,
and a medical doctor can switch from working from one hospital to another hospital. They don't have their license suspended for the week while the bureaucrats shift their license over. But in the mortgage world, we have to like, oh, wait, I'm switching from ABC mortgage to XYZ mortgage. Oh, wait a minute, I can't practice for 2 weeks while the bureaucrats are switching my license over. That's the stupidest effing thing ever.
That was another thing she was talking about, how with the medical stuff, again, I know this is a mortgage thing. I swear to God, we'll move on at some point
We're in
soon.
that rabbit hole, aren't we?
Yeah, exactly. But on the medical side, so there is somebody could have had a complaint filed against them and have some criminal charges or civil charges pending, and then the medical board will wait until that's all resolved until they make a decision. Meanwhile, anyway, it's the craziest system. I had
Yeah,
no
I
idea.
personally had a doctor that was busted for opazoid stuff.
Opazoid,
Yeah, or
opazoid.
whatever. Yeah,
Sounds like an
overprescribed.
80s rap song, do the Opazoid or
Yeah,
something.
yeah,
Yeah.
exactly. And yeah, apparently she was overprescribing certain things, and she just moved to another state.
And you go to her?
Not anymore. She's
Oh,
not
I
in my
thought you said
state
you have
anymore.
a doctor. What?
She's not in my state anymore.
Oh, oh my God. Oh my God. Oh my God. Oh my God. Okay, so back to AI. So again, some things that in let's say you're an LO who's been doing loans for 10,000 years approximately. And you think, you know what? I just have a referral business. That's it. I don't care about anything else. What would your suggestion be to somebody who may be a little tech adverse, but some little baby steps that they could meander into the waters and at least be semi-current? Do you have any thoughts for what they could start with?
Move a mouse. Okay. How did you start to learn to use the internet? You learn the internet by typing in yahoo.com or AOL.com or whatever it was, and you just started to do it. So
Yeah.
if you're saying, I don't know what to do, I'll get a couple things. Thing number one, I'll make you an expert on ChatGPT right now. Anytime you use that, you do four things. You got a thing that's called a prompt. It says, what do you want me to do? I'll build it for you. I want you to do this. Four things. I am, they are, create a, form of. What does that mean? I'm a retail mortgage loan officer. They are a first-time home buyer. Create a list of 5 reasons why now is a good time to buy a home and put it in the form of a social media post. Boom. That's not the things that you're looking for. I am, they are, create a, form of. Next thing I want you to do, go right there and type in, I am a I'm a person selling my home. My address is 1234 Main Street. Just put whatever your address is. Create an MLS listing description of this property. That's it. Boom. You'll get the MLS description, and it's going to be better than anything that you could ever write. Then the third thing I want you to do, go in your house. I happen to be in my kitchen right now. I'm not going to turn my computer, but this is, and take a picture of your kitchen. Go there, you'll see a little, it looks like a paper clip. So that means upload a file. Upload the picture right there and say, give me a description of an MLS description of the room in this picture for the listing. Boom. And see how it describes that. After you do those 3 things, you're going to go like, oh, I see it. But here's where the one thing that I said perplexity before. I believe as LOs, I believe it. I get more challenged every single day. The LOs I talk to are more. My mother said, my roommate said, I heard that the Fed, they said rates are 0%. Why aren't we getting, you're wrong. Do you guys agree that we're being told that we're wrong a whole lot more than we have in the past? So I go back to Miss Geis. She was my 8th grade math teacher, where she said you have to prove your work. And you got to prove your work now. And what Perplexity does is anytime you're looking for a stat or a fact, it will say, home values have gone up in da 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 da, and then it'll give you a footnote, and it will tell you according to Case-Shiller or the FHFA or wherever. So you, instead of the person that says, "Oh, that's wrong," okay, what source do they have to show that? Because here's the source that I have, and Perplexity will source all of your research for you, and I love it for that.
So I think one thing that's interesting about our business, one of the 8 million interesting things, is how much nuance there is. And it is not a one size fits all. That's why all of this tech talk is very interesting, because while it's very important, it's not going to replace a human. as we know, we run our loans through, as you said, the automated systems, and then it's reviewed by a human. And ultimately, the regulators have very clearly said that at the end of the day, no matter what your automated system says, the human is responsible because the automated system is not licensed. We are. So it's important to remember that when we're going through this. There was an existing home sales report that came out, I don't know, recently. It could have been today, it could have been 3 days ago. Who knows? Sometime in the last week. And I thought there was an interesting thing about active listings versus inventory because it could be very confusing, right? So they were noting that existing home sales for June were down 2.7% to 3.9 million units at, annualizing the number of sales. So we're below the 4 million mark. Those are contracts that were probably signed in April and May when the rates were a little higher and then closing in June. So the active listings are at 1.08 million. Okay. It's 29% higher than a year ago, but it's still 11% lower than pre-pandemic, and the population is 12 million higher than it was. But then if you hear, oh, inventory is at 1.53 million units, then you're like, wait, active listings, inventory, what's the difference? Well, if you're sitting at a dinner table with a bunch of people who aren't in the business, they don't know the difference. They don't understand that you can have inventory where you have a bunch of that inventory in contract. So they are not available anymore, right? So anyway, I thought that conversation was interesting just in the sense it really does highlight that there are some things that you're not going to know unless you learn it and you're in the weeds and you are living it every day like we do, right? So just to finish that up, I thought was interesting too. So the property selling above list price still 21%. And yes, this is all nationally. This is not necessarily specific to where you are, but sold above list 21%. First time home buyers are 30% of the market. Cash buyers are 29% of the market. Investors are 14% of the market. And again, the property that I'm doing right now, the purchase that is on warp speed right now is they went up for sale on July 17th. They had 4 offers within a couple of days and were in contract immediately, as opposed to something that's been on the market for months. And I'm having more and more conversations, and I'm curious whether our listeners are as well, where you've got sellers who want a certain price and the realtors are just capitulating and saying, okay. I mean, and everyone has a semi-different approach. Some people will say no to the listing. Some people take the listing and tell them it's just going to sit there. I'm telling you. And some people will just take the listing, not say anything. And then, 3 months from now, they have pissed off buyer or sellers. So it's a weird market out there. But if you've got a property, you're pricing it right. You've got realtors who know what they're doing. They can have real conversations with each other. Then you can get deals done. But again, it's not just stick a sign in the front yard and hope for the best.
I
You
would
went
agree
a
with
couple of
that.
different places there, so I'm not exactly sure how to respond to that, but I will say this. As much as you threw, I don't know, 16, 17 stats that were up there right now. I thought we were going down one place, but we ended up somewhere else. This is where I think the human people make a difference. I hear every stat that you just said, but my son's looking for a house.
Yep.
And what happened was going through that process with him of looking for a house. One, I know younger people are looking for homes. Two, when the inventory comes up, everybody at least in my area, everybody swarm into that home and they're all going for above asking price. So you better have a good real estate agent that's getting you there, getting you right priced and getting you ready to go. So yeah, you hear this, oh, well, this one's sitting on the, that my eyes sometimes are different than what the statistics show you on paper. And I think that's critical for all of us to do because as we know, real estate is local. So you got to see where you are.
Absolutely.
So you're in North Carolina. So technically that is still the South, but you seem to have a market that is a lot stronger than say Florida or some of the other, what do they call them? The Sun Belt, Sun States, Sand States. No, not Sand. Anyway, down there. So a lot of those markets are really suffering, but not North Carolina, it sounds like.
Well, the way that I look at all that, big picture, is if you made big gains, you're going to maybe have big losses. We're the little engine that could, right? We're always somewhere between 3 to 5% a year, 3 to 5% a year, of appreciation. So when you chug along like that, guess what happens? When the market goes down, it doesn't go, we don't get big swings up, but we also don't get big swings down.
Swings down. Exactly.
3 to 5%, in my opinion, is just a very sweet spot. It's just enough. It's not stagnant, but it's just enough to keep things going. So
Yep.
it is, yeah.
So, but when you do get a big 10% jump, you should sell.
What?
Yeah.
That'll take us to the other question of the fact that I have like a 2 5/8 rate, which means they're moving me out of this house with my toes up, right? Because they're going to have to wheel me out of this place. I love my house. I'm not going anywhere.
Okay, so one of the things that we hear a lot of is, go back to the basics, but you have a much better way of framing that. So tell us about that.
I hear it all. Got to go back to the basics, man. You got to build on the basics. The basics are still there, but you got to add something in. You're not just taking what it used to be. You're taking what it was used to be and putting in everything that works today. So my joke is always, and I've been doing loans since the 1900s. I like to tell people that, because I started in the industry in 1996. So 1900s, I was doing mortgages. And we used to, I was doing it before there were credit scores. We had to get the credit report and look at the ones and the zeros to see, okay, how many misses have they had? They didn't have credit scores.
Much better. So much better than this credit score nonsense.
And it would have thermal paper that would fall behind the file cabinet and everything. I'm not going back to that, but I have to still, relationships, are they important? Yes, but relationships are different than they were in the past. How do you build on that? You take your relationships, but build it. And how do you add the technology into the relationship with the AI and the social media to be able to get other places? So I don't think we go back to the basics. We don't get rid of the basics. We build on the basics. We're in real estate here, mortgages. That's the foundation of the house, but we're still going to put a beautiful roof on this thing and a wonderful bonus room upstairs. Build on the basics.
It's such a better way to put it. I'm going to adopt that too, because I really do believe it is a combination of the old school and the tech. And how do we figure out where that ground is, where they meet in the middle somewhere, hopefully, and we incorporate both, because it is not a one size fits all. As we've talked about ad nauseum, it is so specific to the person, the transaction, the deal, the location, whatever, right?
I hear it all day long. Real estate agents aren't in their office. First off, we heard what? The NAR lawsuit came in. There's going to be no more real estate agents. They're getting rid of all the buyer's agents. That did not happen. Stop. So, but the real estate agents don't come into the office. What am I supposed to do? I still want the relationship. Social media is how you build on the basics, through social media, through video and all of that, the electronic communication, through Zoom calls like this, FaceTime. My gosh, you can hit a whole lot more people without actually getting out of your office and be able to have that face-to-face, eyeball-to-eyeball conversation with them. Build on the basics.
Well, how about this? So yesterday, as I'm closing this loan, like, I don't know how long early, way early, I'm like, maybe I should call the listing agent, make sure she's really, make sure the seller's like doing their thing. And so I call her. Oh my God, we totally hit it off. I love her. She literally loves me. She thanked me, by the way.
How could she not love you? That's a whole nother story.
Oh, trust me, I think there's a wide spectrum, and people are usually on one end or the other, not necessarily. Anyway, so she was wonderful. And, but she thanked me for the emails, the update emails she'd been getting. She actually read them, and I had never really valued them to the level that I maybe should have. So she appreciated that. And then we just connected. We're going to get together next week. I think I'm going to have a new realtor to work with, and somebody who is, I don't know her. I mean, I hadn't met her. I've been in this area for 10,000 years approximately. And but she does business. She does it really well. She worked this deal out. There were multiple offers, the way they handled it, all of it was, anyway. So, pick up the phone, go. And we have been saying this since COVID started to break up a little bit. We're like, put on some clothes that don't stretch, make sure you've bathed, and go out into the world and meet people in person, because those relationships are so important. And
You
that
didn't go out and meet this person in person. You called her up.
I did, but we're going to meet next week. Are you paying attention, Kevin? Jeez Louise. So anyway,
I find
she
the easiest thing you can do, and it'll take you literally less than 30 seconds. Take your phone, look at, I don't know what phone that I should use. This is better. We're having Jaws. Remember the movie Jaws? It was 50 years ago. This is a
No.
better camera than Steven Spielberg used when he did Jaws. You have fine video equipment in your house. Don't worry about it. And go, hey, man, it's a crazy market right now. I'm just checking in to see how you're doing. Boom. And then just text people that message or DM them on social media with that message. I get more response from that 10-second video than I could ever get by calling them or sending them an email. They love the video. Then you engage in the conversation, meet them out face to face. Boom, you're good to go.
It is, it could be noted that our market is always crazy. So I know this because I have lifelong friends, and some of them live on the East Coast. So you don't talk to them every day necessarily. And I have one friend who pointed out, after 20 years of her saying, how's your business? And me apparently saying, it's crazy. I finally realized, she goes, you've been telling me that for decades, literally decades. And I realized our business is always crazy. This is one of the reasons we don't need to gamble. We don't need to do drugs. No, no. We have the mortgage business. We gamble with the bond market. We are always dealing with some other exciting, crazy thing, some deadline. And so our business, this is normal. It's not the normal we like necessarily, but some version of crazy is normal. Just embrace it and be cool with it, because
Actually, we must like it. Otherwise, we wouldn't keep doing it.
totally, totally. So Tiffany said that we are real close, by the way, as far as when we're leaving our houses. So, and Steve, I was the one person probably in the entire industry that every single day during lockdown, I came to my office. I was the only person. I have pictures of the streets and where I am in Walnut Creek, California, where there was not one single car, not one single person, and it was just me. But I came to the office every day. I took a shower, I had makeup on, just because I don't function well if I am, if I'm just slacking around at home, or I don't know. So there is something to be said for getting dressed in the morning, making sure that you look presentable, and go interact with some humans. It's a lost art, but it's really worthwhile, I promise.
And here's the one that they say has gone away. And I understand it's not always possible, but I hear less and less originators doing it today. Go to your closings, go to your closings, go to your closings as often as possible. You're meeting the attorney, you're meeting the real estate agents on both sides face to face. Your customer is happy. And you know what else that does? You're a little burnt out. It reinforces when you have a customer that's sitting right there and looks at you and says thank you and gives you a hug because they're so excited about all this. Boom. I know my son's like, I hate going in the office. I'm like, yeah, because you're 28. You got to go in the office, dude. You're going to get so much more out of that face to face. So yes, go to your closings if you can. I know somebody just texted in, but I was talking, so I didn't know if that was an important message.
I was so I always went to my closings. I had people make fun of me so much I can't even tell you. And now people are like, "Oh, I'm going to meet a notary. I'm going to do it right now. It gets harder." But again, like even when that's happening, I call them and I send them the closing statement and we go through it over the phone line by line. It again, forging those relationships. But I agree with you 1,000% that if you can be at that closing, be at that closing. So Peter said and I'm assuming he's referring to, went to the office every day during lockdown, except his house burned down in 2020. So it made it a little more difficult. And so for that, oh my God, I'm so sorry. Can
No,
you,
actually, it made it easier for him to go to the office because his house burned down.
yeah, you could go live at the office, right? But I mean, can you imagine can you imagine that? I mean, you're in lockdown and then well, gosh, Steve, you're in North Carolina. Did they have lockdown there?
Oh, yeah, we had lockdown.
Okay. So I talked to someone in Missouri. They're like, Audrey, we didn't have lockdown. I'm like, what? I'm like, you're kidding. Like we were the first, I'm in the first county, I think, in the country that locked down, and we locked down soon, early, and hard. And so I'm like, ugh, it was rough. Anyway, thank God that shit's over. Excuse me, kids. Can't help it. All right. This morning, I got myself into a little rabbit hole with this new housing bill. So, have you heard about it? Have you? It's the Road to Housing Act for 2025. And it has bipartisan support and apparently just passed the Senate this morning. So I was trying to figure out, because I have met, as Kevin has as well, we have often gone to Sacramento and Washington, D.C. to talk to our legislators. And when you do that, you find out
They
that
know nothing.
they don't know what in the hell they're talking about with regards to mortgage. So whoever gets there first, who has the most money, the biggest mouth, they win. So then we show up. We're in the mortgage business. We're on the LO side. Nobody has the backing of a huge company. And, and so it's not always easy, right? So is this going to do anything? Because it always makes me go back to SB, I think 2 in California. It was the bill that led to every recorded document being having a $75 charge in the state of California. They CAR carved out purchases. So anything other than the documents in a purchase that is recorded in the state of California, there's a $75 recording fee. Did I mention per document? Yeah. So now the cost of recording documents have gone through the roof, and they're trying to go up again. Just for the record, there is this push right now to pass another bill because the recording offices need more money. What?
And remember, this money was originally supposed to go towards low-income housing.
Affordable housing. It was
affordable housing. And then which group?
It was called the Affordable Housing Bill or something. And so if you opposed it, guess what you were? You were a real jerk. So
yet the money never went to affordable housing. It just went into general fund. And number two, who signed the most documents that need recordings? People doing affordable housing loans were the ones who had to have multiple signings, of things being notarized, and each one was $75. So the poor person that needed the money and the money was supposed to be for them, they were the ones who paid the most in fees.
So a couple years ago, Kevin and I were doing the show. We had one of our state legislators on, and I asked him, so where'd all that SB2 money go? Because back in the day when it was first proposed, I had said, as I was jumping up and down, screaming and yelling about what a terrible idea I thought this probably was, I said, how are you going to allocate the money? How is the money going to be distributed amongst the counties? How do you figure out who does what, gets what? What are the logistics of how it's going to work, right? And I was shot down, and basically I was a jerk because I was even mentioning anything that could be a problem. Okay, so flash forward, this guy, God bless him, he was honest with us. So to the question of where is that money, he had no idea. So the answer is it went into the general fund and has been not at all focused on affordable housing. So you can only imagine my skepticism when I'm reading about this housing bill that's going to fix everything. But it has bipartisan support, it's passed the Senate, and all of our favorite little acronym trade organizations are backing it. So this is what it's supposed to do. You ready? Improve affordability. Does that sound vague at all to anyone? Ensure accounting and housing programs, streamline local housing production, remove regulatory barriers, expand financing options for affordable housing. It's going to prevent foreclosure by improving housing counseling, financial literacy, and it's going to modernize appraisal requirements. So I promise you, since this just passed this morning, the Senate, by the way, so who the hell knows what happens next, but it just happened this morning, and so I will be calling my buddies who are much more finger on the pulse on these things and getting some more information on it. But I want to know the logistics. How is it going to work? Is it really going to work? How does the federal government tell a state local government that they got to loosen up their regulations? I mean, is that going to happen? I mean, anyway, I have a lot of questions. Anyone have any answers? Go.
A friend of mine always told me this, and I just think it's right. If you want to know what's happening, don't listen to the legislators, listen to the agencies. Because the legislators put out the word, the politicians put out the words that you just said. We support federal housing and we support smart money spending. Nobody's going to say I'm against that, but how it gets implemented, that's what the agencies' decision are. So if you really want to see what's going to happen, check out the agencies, not what the politicians say.
You mean agencies like FHFA,
Whoever they take that law and they say, here, you go enforce this, you go make this happen, you go distribute the monies. When you watch, like FHFA, like HUD, if you watch what the agencies are doing, then you can see what's actually getting done. The politicians are going, I'm for affordable housing, look at me. But it's the devil's in the details, right? It's all, everybody agrees that these are good things to do. It's about how's it going to get done. And the agencies are the ones who get it done.
Yeah, okay. All right. Well, and I see trade organizations, which I have had a lot to do with. I see them sometimes just getting on board on these things. And so I mean, and again, what do? You say no to this? No, you can't do that. I mean, obviously, even I would not object, except I'm asking how. I want some practical, how in the heck is it going to be implemented?
Well, you know, the best example is what was implemented back with 2010 when they came up with all these rules on lending and how to, and they basically what they did is they added a whole bunch of hurdles that we have to pass through in order to close a loan. And when I talked to legislators about it, like, well, we know none of this is actually going to do anything, but what it does, it slows down the process and it makes it so that the evildoers get frustrated with the process because they can't make a fast buck and they move on and leave the industry.
That's bullshit.
Yeah, that's how their logic is.
I'm so sorry. I'm sorry. That slipped out of my sweet, innocent little mouth. That is complete nonsense. That is not what happens. The bad guys don't just go, oh, this is too hard. They're like,
Yeah.
they are the ones who have time to sit. They have no day job, Kevin.
Yeah, well, what's our number one complaint from as an LO? The process takes too long. And we're like, yeah, no, you have to wait 3 days. No, you have to wait another 3 days. You have to wait another 3 days. Like, just because.
I would just like to say I'm about to close a conforming purchase in 8 business days, maybe 9 business days.
Just saying.
I know. Okay, so we have a couple comments. There are other people besides me who actually have always gone to their closing, so that's good. Jenny's brother was in South Dakota and they had no lockdown, and apparently he laughed at us, so that was nice of him. Little booger. I hope that he got coal in his stocking that year. And then Deborah says broad-based principles hopefully will lead to housing guidance at best. I hope so. I mean, I hope so. And by the way, the best part of this is these people are working together finally on something. I mean, that's a miracle.
That's amazing.
Itself, isn't it?
Especially those two.
Oh, right. Right. Who's the other guy? It's Elizabeth Warren and who's the co-author?
The other guy. That's who it is.
The other guy. Okay. So yeah, but again, like nobody objected to this. I mean, I don't know. It's kind of nice to see. But again, how's it going to roll out? And how is it really going to help people? Right. So, oh, Tim Scott, thank you. Somebody has got their act together there. Okay. So we know that we have a lot of equity in the United States. Yes. Yes. Tappable equity in the US is $11.5 trillion. And that is leaving a 20% cushion there of equity because obviously we can't do 100% anymore. I mean, somebody took that idea away. Anyway.
So
I remember the 125%, but forget 100. There was 125.
Oh my God. That was the dumbest thing ever. Anyway, back to there's a lot of talk about HELOCs right now, and I'm doing a few of them. I know Kevin's had a bunch of them. And so it is a thing. And we all, I mean, okay, I can't speak for every person, but a lot of us used to say, I'm not doing them, right? Because we had so many firsts to do. Why would we ever waste our time on seconds? And now we're realizing, okay, well, better a second than nothing. Well, I guess part of what changed is we now get paid on them too. So that's a nice thing. But also it's continuing the relationships with your clients and making sure you're staying connected. So the first thing I always do, I still do this, I send them to their bank. I'm like, go check with your bank, see if they'll do your deal. See if it's better than what I can do. So send them to the bank. 9 out of 10 times, maybe more than that, they come back and they can't do it. Either their bank isn't doing HELOCs, they don't qualify, the credit, whatever. There's a million reasons why a bank may or may not do their HELOC. So then we got a ping from one of our faithful listeners who also does taxes, and she was pointing out that you cannot deduct the interest on a HELOC.
Mhm.
That is not something that was a purchase money HELOC. So that now begs the question, as people are not doing tiny little HELOCs, they're often hundreds and hundreds of thousands of dollars. Are you making sure you're doing the blended rate for the first and the second? And making sure that doing a HELOC, and have them talk to their tax person and make sure that they are doing the best loan for them, because maybe even though they have 3 or 3.5%, maybe it's not so great to have this 8, 9, 10. I just heard of one yesterday that was 13% second that you can't deduct the interest on. So just food for thought.
When interest rates dropped like 50 basis points a couple months ago, boom, everybody was looking to refinance to get rid of that 8, 9, 10% of whatever else they had so that they're having that blended rate. That was big.
Blended
Yeah.
rate, baby. Blended rate. You've got to make sure you're checking on that. And just to know, NBA says, do you love all this, Steve? I mean, I warned him. I warned you. Just tell them I warned you. It's like a ping pong ball. You got to like pay attention and keep up, right? So anyway, NBA has said that 40% of the applications are refis right now. So it is definitely a big chunk of what we're doing. But I want to remind you that when it is time to do all of these refis, the servicing companies are going to be on it hard. And it is going to be not so easy, not as easy as it has been in the past to retain some of those clients. So make sure you're focusing on purchases. Always, always, always.
Yeah,
Hey,
my trick is I was going to say my trick with my clients right now is how to get all my people that are purchasing to actually stop going on vacation and go buy a house. Because they've all seem to have taken a break all at once. What the heck is
Okay,
up with that?
so my client who is closing this week is going to Canada on
Yeah.
Saturday. Or
Yeah.
Friday. So it is, and there was a time that and I had a ton of business going. It was during a busy time. Every single client I had was either in Hawaii or Europe. Every one.
Yeah.
So this idea that you want them to stop going on vacation, get over it. You just need to get them into contract and figure out how to work
Get into
around.
contract, then go on vacation. Yes. And then I'll figure out how to get you signed, whether you're signing in, Bangkok or Bangladesh. Doesn't matter. We'll figure it
Oh,
out.
and funny because I got a referral yesterday, and the guy's like, "Oh, we're leaving for Hawaii on Saturday." I'm like, "Of course you are. Of course you are. Like, why wouldn't you?"
So, Andre, do you go to foreign countries when they're signing in foreign countries?
Say that again.
You say you go to all your signings, but then you're also saying that all your clients go on vacation after.
Oh,
So you
I
must
promise
go
you,
to all these places.
I have offered to fly loan docs to Italy before. You know me. I carry my passport with me 100% of the time, just in case, because you never know when someone's going to say, you know what? Let's go to Europe. And I mean now. And I'm like, okay, I'm in. They have clothes in Europe. I can replicate all of that. Let's go. So yes, the answer is yes, I would. 100%. Oh, God. So, Steve, what
Yes.
else is there that we should be enlightened about as our time together winds down?
Rick, you threw out there MI tax deductibility. I cut my teeth in this business for quite a few years working for an MI company, and I was involved in the argument I was there before MI was tax deductible, and I made arguments of why MI should be tax deductible. So if you'd like to have that conversation offline, I'm more than happy to do that. The other thing that I would just throw out there is this last thought as we're winding down right now is think about the concept. Like I always say, you got to talk to people outside the mortgage industry to understand what's going on generally. So then how we're going to apply that to the mortgage industry. And we've said the word relationship about 15 times already on this last 55 minutes. It's relationship. We got to get back. I met with these people face to face. But everybody here is on Amazon, and Amazon is training the entire world to be transaction and not relationship based. Point, click, and get, point, click, and get, point, click, and get. That's what you need to do. So if all of our consumers are being told you can do it online, you don't need to talk to anybody or anything like that, we still want that relationship, and we know that that's important. So the whole trick to all of this, in my opinion, is to sit there and make that transaction so good. Every phone call, every email, every text, every closing, you make your transaction so good that the customer, the client, they want the relationship with you. It's transforming the transaction into the relationship. I call that a translationship. We'll get into that another time if you want. But that's why Amazon was like, hey, how do I go from Amazon for a person just getting one thing? How do I get them to get multiple? I'll go to Prime, and we establish the relationship with the customer. So even though you're thinking relationship, you're going to deepen your relationship by being better at the transaction. Turn those transactions into relationships. So that if I could impart one last thing, translationship, that's what it would be.
Yeah.
So I have one little thing on comment on that, and that is how I've found most of my clients to come back and refer to me, that they are the ones where the deals went sideways, and I recovered the deal, and that's when I shine. Versus when everything goes perfect, I never seem to get those clients back again.
Can I tell a story real quick?
Yeah.
Yeah.
I'm putting this on social media probably, well, it's going to go next week because I got to tell a story first to make this make sense. But here's the preview. I was in a car accident. I'm fine. We're good. Don't worry about it. But I had to go buy a car. So I'm buying a car, and I'm dealing with the finance company and the dealer. And believe it or not, there were problems with the finance company and there were problems with the dealer. And the dealer sat there the whole time and like, hey, that's just the way the process works, man. Hold on, my computer's going slow. Look, this is just, I know it's not exact. This is how it works. The finance company said, okay, hold on. Let's get two other people on the phone. Let's get this solved for you right now. Let's figure out what we need to do. It's not about getting it done. It's about how you get it done. I got the car and I got the financing, but getting the car was not an enjoyable process. There were problems with the financing, but the great professionals that they were, they rose up to the occasion. And it's about making somebody, helping them make their life easier and getting it done. It's not about putting all the blame. We talked about the curve. We talked about the curve. We talked about the curve. These people said, here's the problem. It went sideways. Let's fix it. The other ones, well, that's just the way that it is. Do you still want the car? Let's keep going. Totally with what you're saying there, Kevin. Totally agree.
Yep.
I'm from a generation where we were told, do not brag, do not talk about yourself, don't tell anyone what you did. Like it was frowned upon big time. I mean, big time. And I did a lot of performing. I was a musician, right? So it was ingrained in me. Do not tell anyone what you did. And it was a number of years ago that I realized we do this in the mortgage industry big time. What do? We protect the borrower from anything that might be going sideways. The realtors, same thing. Anything that's bad. You don't want anyone to know there's ever a problem. But that, to Kevin's point, that's when we really shine and we really have value. And so I realized that we do need to make sure that people do understand what we did for them. Otherwise, they are clueless. And so you can do it in a way. I mean, obviously, if you're like, you know what I did? It was amazing. No, there is a way though that you can frame something that happens, and you do have to like tread the line between scaring the crap out of them and you don't want to tell them, okay, the sky just fell in and I don't have a solution. I typically will figure out something because that's kind of how my brain works. I've got 5 different things I might try. And at some point you figure out how to make sure that they know that this happened, and without you, their loan wouldn't have closed. There's value in that.
I'm
Can you teach
speaking
a
at the
class in
Michigan
that,
Mortgage.
Steve?
I'm speaking at the Michigan Mortgage Lenders Association next week, and that is my first 12 slides. It's called Why You. I can't believe you just set it up like that. I know we're told all our lives that you don't toot your horn, but there is a way to do it and do it well. I know. Bottom line, you're not supposed to toot your horn, but if they don't know you, they've never seen you, and they've never heard of you, then guess what? They don't know how awesome you are.
That's right.
We can still be professional and say, hey, I helped.
Yep, absolutely. So it is.
And I hope I helped you and everybody on this call today. This was a fun webinar. Thanks for having me.
You're very welcome. And maybe we'll
Thanks,
have you come
Steve.
back and bring your 12 slides with you sometime. You can show us the official way to explain it. So anyway, it was great. We loved it. Thank you, Steve, so much. It's so nice to see you. And thank you for all your time. Everyone, there are loans out there. I tell them this there every week, Steve. There are loans out there. Go get them. Go get them and close them. All right. Mwah. Bye, guys.